Hey guys, Krisha here. Please be cautious of any fake comments and emails you may receive from people pretending to be Mango Research. To get in touch with the real Mango team, make sure to join our official Discord chat using the link in the description below. Stay safe out there, and remember, do it Mango. Now, how do you trade a head and shoulders, right? Now, in this case, what we're looking at here is an inverted head and shoulders, which is a bullish pattern. What he saw here was this being the left shoulder, this being the head, and now we're seeing the formation of a right shoulder. If Sean's play actually goes through, we bounce, we clear out the weekly 21 EMA as well as the weekly Tenkin, this head and shoulders triggers, okay? Because the weekly 21 EMA, guys, lines up with that red line, that midpoint. All right, coming in at $1.22. What makes this this picture so good, there's so much confluence, there's so much synergy and everything that's going on here, is that midpoint, okay, that 21 EMA is actually the neckline of the head and shoulders pattern. The way you would draw on the neckline is that you take this region right here, right, basically the top of the left shoulder. You join it with the top of, well, the right shoulder and the head, and that is your neckline. Okay, I'm just going to extend it for you guys the way you see it. So you have a left shoulder, a head, and a right shoulder, which has not yet come to fruition. A pattern only becomes a pattern after the break. So what you're going to be looking for is a break of that neckline, and that's when this entire pattern gets activated. Now, I was looking at the volume, Sean, to see if we have the right volume profile. Right, now I usually like looking at a descending volume profile when it comes to head and shoulders pattern. And why is that? That gives me a sign on potential either distribution or accumulation in that entire region. And when I see that, I'm like, okay, you know what? It's got the right sort of volume profile that I'm looking for to allude to a pattern actually on the chart. So now we have that, we have this beautiful structure right here, and if we get that break, only then does that inverted head and shoulders pattern trigger. Now, question is, what is the measured move of the pattern? Now, to take the measured move, you basically take the tip of the head all the way up to the neckline, you take that line and smack it on the potential break that you might see, okay? Now, remember, the break only comes in once we take out the neckline. Now, if I just go ahead, adjust my scale, maybe I can just put off that, okay, put off the volume, and what do you know, where does the measured move take us up to, Sean?
Lines up with the C-SPAN trade. There you go. Now, Krisha, you brought up, this was such a brilliant explanation, especially the fact that you brought up the volume as well. I want to add on to that, especially since you brought up the volume, the psychology of what's going on over here.
Yes.
Right? And we often talk about how trend is everything. Correct? And trend is where patterns are actually derived from as well, especially since you said that the pattern does not get activated until we actually break this neckline. And why is that, guys? Why is that? It's because when you break the neckline, it is an invalidation of the trend of the current pattern, right? And the invalidation of a trend and ends up being the reversal of a trend, and it's a trend reversal signal. So what is going on over here, right? Let's talk about the psychology, because remember, an inverted head and shoulders is considered a bullish pattern. Why is it considered a bullish pattern? It's because on the activation of the trend, of the pattern, you have an invalidation of a bearish pattern, right? And what's the bearish pattern over here? Well, it's the fact that we have a downtrend, right? Right over here, guys, we have a downtrend, right? You have your low, right? Your high, your lower low right over here, and now it's on the bears to come in and put in another low, right, by taking out this low over here. So the bulls pushed it up, and now the bears, the onus is on them to come down and push price back down over here. So everyone's watching, all the market participants are watching and saying, hey, is this going to happen? Is the trend going to continue, or are we going to invalidate that trend, right, and put in a higher high instead? Because remember, we have a high over here and we have a new high that the bulls are threatening to break, but they didn't. The bears came in and defended it just in time, right? Let's go through the psychology again. The bears pushed the price low, then the bulls pushed it back, Then the bears pushed it again lower. All right, cool. Bears are still in control. But then the bulls pushed it back, right? And this time they almost took it back to the previous high. But the bears were like, nah, we're coming in and defending that high. And they pushed it down. Now the question is, do the bears have enough strength to push it further down? This is what the bears want to see. However, if the bulls defended again, and this time defended higher than the previous low, it would mean that the bulls are gaining more strength. And then as soon as they take out this level over here, these highs over here, it would mean that they put in a higher high, and that entire downtrend is invalidated, and you have the activation of Krisha's head and shoulders pattern, and you look for the measured move all the way to $1.90.
Beautiful, beautiful. That was a brilliant explanation. And I just want to drive this one point through, guys. Ultimately, patterns, these names that they give patterns, right? Head and shoulders, cup and handle. These are all just names to make it simple and to put in a textbook of sorts. Ultimately, all patterns are a derivation of trend analysis. Now, for those of you in the SEED program, I implore you guys to just go and watch that trend analysis module again and again until you actually get those trends, as well as how these formations really come to play, and that will basically paint the entire picture for you. It'll tell you what pattern it is. It will also tell you how to play it and what psychology really goes behind that pattern. Give that module a watch again.
Honestly, I just want to interject over there and just throw out, for those of you who are learning on your own, and you guys for whatever reason do not have the funds, right? You don't have the funds for the C program, but if you guys have the time to go and learn all of this on your own, I implore you to approach charting in a way that allows you to understand the core fundamentals of what is going on, as opposed to memorizing things. Again, even for the candlestick analysis module, right? I teach you guys how to analyze candlesticks without having to memorize all those pattern names. Teach you guys the fundamentals, the core of how to actually read and analyze any candlestick pattern, right? That way you're not memorizing all of these charts, etc., that people put out there. Similar story with divergence, etc. The names do not matter. So when you're approaching your learning, guys, I implore you guys to learn independent of all of these names and all of this jargon that they throw at you, because all of that just adds confusion.
And if you guys like this video, smash the like button, and if you haven't already subscribed to the channel and you want to keep up with the latest mango juice, well, hit the subscribe as well as the bell icon, and we will catch you in the next video. With this, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.
Ciao, you guys.